Okay, well, it's an absolute pleasure to be here. Thanks. I've been just enthralled with the two previous presentations. I've learned so much here in the past hour, so I hope you have too. And now we're going to swing it back over to markets. And again, thanks for inviting me, Katie, for the intro, and Jacqueline for the invitation. Many of you, as you heard the introduction, I've been a market analyst for a long time. There's never a dull moment in these markets, and of course, we've had a fantastic 2023 behind us. And so everything as we start the calendar into 24 and look at what lies ahead, hopefully I can share some of the information with you to help give you some ideas of where I see things heading. And I certainly hope I'll leave enough time for questions at the end, or certainly, as Katie said, put them in the question box. So I am in Southwest Saskatchewan. I know it's called East End Saskatchewan, but it actually is the east end of the Cypress Hills. And so that's where I reside, and that's where I'm at tonight. And thankfully, the cold snap that hit a week or so ago is long behind. We're above zero today, and a little bit of snow on the ground, but we sure could stand some more. We'll talk about weather some more here in a second. So let's see if I can move this presentation along. There we go. I think it's a little bit of a delay, so I'll try to speak slowly as I move along in the presentation. Many of you, I suspect, maybe not, but I'm going to make the assumption of seeing a type of Outlook presentation before, and maybe even my style. But I like to talk about the numbers and the supply piece first, and then we'll talk a bit about demand and exports, and then we'll finish up on some of what I look for price projections as we head into the rest of this year and beyond. So starting, and again, I'll quantify this as well. I do talk a lot about the US in terms of the North American cattle market. Certainly our Canadian cattle prices follow those of the US. We're about a tenth of the size of the US, and so that's why. And ultimately, what happens in the US has a very large impact on what happens north of the border. And so I do talk a lot about both sides of the picture, so you can understand maybe why I'm going in a certain direction. So we're starting off on the US beef cow herd. Certainly has been in a significant liquidation mode since 2019 was their last cycle peak for beef cow numbers. Next week, USDA is going to release their January 1 numbers. So on the 31st. So we'll see what that brings. What I've got projected in here on this slide is about another 2% drop in beef cow numbers on the January 1st, 24. That'll bring it down to about 28.3 million or 28.1. And then by the following year, looking at about 28.3 to 28.1. We've basically then will have taken about 3 million head of cows out of the inventory since the cycle peak of 2019. So as we go forward here, certainly the supply story is pretty critical, as well as one of the pieces you can look at here, I think, is back in the last cycle bottom of 2014, 2015, it was a very quick bottom and return back to larger numbers very quickly. And most analysts are expecting this one to be much slower. We'll talk about drought in a minute. That's been a big factor. There's been very little retention of heifers. And so those have been some key factors about why many feel that this will be a longer cycle to turn the corner, and therefore higher prices a bit longer than we would have seen in 2014-15. And here's a picture of US beef heifer numbers and where we sit on the chart right now in 2023. Already as of last year, we've seen heifer numbers down about 20% from the cycle high in 6 years. 24, we're expecting the numbers still to be down another one. So 7 years of reduction of replacement heifer numbers in the US. Typically in past cycles, maybe 4 or 5 years before you start to see the numbers return and building again. So this one certainly is looking like it's got a longer tail to it in terms of smaller replacement numbers longer. So we'll be looking to confirm that number when that report comes out next week. And putting all those pieces together, something to watch, especially if we're going to, I'm assuming we've got lots of cow-calf producers on the call here tonight, as we talk about and think about what the demand for feeder cattle and calves is going to be. We look at a number, we use this number both in the US and Canada, and we call it the US feeder supply outside of feedlots. So, what's left for cattle feeders to be bidding on as we start off 2024. And again, this will be confirmed next week, but the projections right now for that number to be down another 4% when the report comes out. So again, it just showing how the supply continues to get tighter as we go forward and continues to provide a pretty good amount of support for the feeder cattle market as we go through the year. This number at 24.4 million will be about, if that's correct, will be about 900,000 head smaller than last year. Bringing it back to Canada, forecast when we get our numbers out, StatsCan will release the Canadian data in February. And right now the projection I have in here is down 2.5% on our beef cow numbers. That'll drop it down to 3.47 million head, assuming there's no revisions going backwards. And again, as you can see on the chart, the smallest beef cow inventory we've seen since 1990. So this trend's been in place for some time, as you're well aware, and don't anticipate it to be changing at all when the report comes out in February. Well, I use a lot of CanFax data for Canada, and one of the reports they put out each month is a cattle on feed report for Alberta and Saskatchewan. And although I'm referring here to the Western Canadian numbers, it gives us a really good viewpoint or kind of trend line in terms of what's going on in terms of placements, and I think it's valid across the country. But in 22 and again in 23, we saw some very large heifer placements going on feed. And again, logic says if they're on feed, that means they're not staying back in the herd. And so that data has been pretty consistent here the last couple of years. And so certainly these it goes after in 2021 when we had the widespread drought, we saw a 16% increase in heifer placements back in 21. In 22, it jumped another 9% again. And this past year, it held steady with that number. So we've set some very large heifer placement numbers over the last number of years as we go forward. Steer placements, just as a comparison, in 2023 were down 4%. And back in 2022, they were down 11%. So more clearly showing you the smaller supply of steers in terms of beef cow, the calf crop, but a bigger percentage of heifers continuing to go on feed. And that's been one of the reasons why we've seen on feed numbers stay bigger than many of us, I think, thought would happen this far along, simply because we see more heifers continue to be placed on feed. And again, looking at that same number that I showed you for the US, that feeder supply outside of feedlots, when that number rolls around in January, this past year it was down 2% on the 1st of 23. And again, by far the smallest supply that we've seen since CanFax started this on-feed report, reporting the cattle on feed numbers in Western Canada back in 2000. So we've never seen in that 23 years and going on probably this next one, 24, anything smaller in terms of feeder cattle supply outside of feedlots. So again, very supportive to the feeder market, whether we're talking in the US or here in Canada. And I don't think we can talk about the North American beef cattle sector without talking about weather. And of course, drought continues to be a significant factor. Yeah, and especially here in Western Canada, we've seen widespread drought, ongoing drought. They're starting to stack up on one another, and we've had some pretty significant areas that are still, this chart is as of the end of the year, but still showing some significant dryness. 80% last year, it was estimated 80% of Canada's cow herd resided in some type of a drought drought condition. In the US, CattleFax has reported 2/3 of the US cow herd was in some type of drought condition at the end of 23, and Texas in pretty significant drought. And remember, Texas holds 15% of the US cow herd. So what happens in Texas really does count. There is in the US some early indications of some better moisture conditions, but if any of you follow some of the meteorologists that I've been listening to over the last little while, certainly many are talking about this transition from El Nino to back again into a La Nina conditions in 2024, and all the questions around when moisture might come, how much might come, how hot or how dry does it get, really depends on how that transition happens, when it happens. Is it a speedy transition from one to the other, or does it take some time? So I think right now I'm told, I'm not a meteorologist, I'm told that we still need some time to really make that decision, or be able to see meteorologists make a better claim around what we might look at for some moisture conditions. I know here in Southwest Saskatchewan, we're sitting today with maybe 1 to 2 inches of snow on the ground, and conditions are supposed to get pretty mild by the weekend, so it will be nothing here pretty quick. So, and we really haven't had any snow this winter. Looking at some of the reports that help tell us about what's happening in terms of placement patterns and numbers of cattle on feed and what the supplies look like. One of the monthly reports from the US is their cattle on feed report. They just released their January 1 report, and we saw on-feed numbers up 2% from last year. Compared to the 5-year average, we're up 1%. And again, we saw some very big placements again as well in the US due to the drought conditions earlier on. And that'll show up here on this chart right here. So those early placements really through, it started really in late August, but September, October, we saw some big numbers go on feed there. Since then, we've seen numbers back off. Placements in November and December are down quite a bit, and we anticipate that to continue. So eventually, going back to that previous slide, we will start to see on-feed numbers drop below a year ago. But the question, does that take until the second half of the year, or does it take till later in this first half? But certainly here through the first quarter, we're going to see on-feed supplies remaining above a year ago, simply because we had so many cattle come on feed because of the drought, and also in the US because of Mexican feeder cattle imports. Here in Canada as well, Canfax publishes a monthly cattle on feed report for Western Canada, for Alberta and Saskatchewan, which will cover pretty close to 75% of the cattle fed in Canada. So on January 1st, they were up 1% for numbers of cattle on feed. This would be in finishing yards, over 1,000 head one-time capacity, and that's up 2% compared to the 5-year average. So as well, they were certainly also impacted. I'll show you this next slide. Also were significantly impacted by the drought placements, which here in Western Canada really picked up. This blue line you can see starts in June, July, August, September. We also saw big placements coming on feed early, and then numbers really started to back off in terms of placement patterns as we finished off the fourth quarter. So we'll be looking for that. I think with the kind of weather we've seen here in January, we're going to expect January placements to be down as well. But in the month of December, we saw placements down 14% in Western Canada, and they were also down 15% from the 5-year average. So we'll look for, again, an update. And I've said all along, if we're placing the cattle early from drought, we won't be able to place them later on. So it's shifted some of our supply challenges as a result. The other piece that's really changed the Canadian feeder cattle supply piece is the feeder trade, or feeder imports, to be specific. So Canada has historically always exported feeder cattle, but in 2017 we started to see a shift to more feeder cattle imports as well. And so the slide on the left-hand side is showing you the imports of feeder cattle starting in 2017, and then really picking up 18, 19, 20, and 21. We saw 375,000 head of feeder cattle come north. It was reduced a wee bit in 22, and then back up this past year, pretty close to that 300,000 head when all the data is said and done. So the slide on the right-hand side, what I've attempted to do here is net out the exports. So you can see the impact of the net trade difference from what we used to do kind of pre-2017. And now we're into certainly a net import position, and we'll be a net importer this year. As you see at the top, I've got imports estimated at 300,000, exports estimated at 135,000 head, leaving us with a net import of 165,000 head. So this has certainly been one way that Canadian feedlots, specifically Western Canadian feedlots, for the most part, have been dealing with a smaller beef cow herd to continue to fill pens and bring more cattle on feed due to the smaller supply in Canada. And going forward, I think even with, and yes, the feeder import number is a bit of a variable. It's hard to predict. But at the same time, I think it is a part of the supply piece for now. But last year, this first black line is 2023, and we did see 8% fewer cattle fed in Canada this past year. And that number is expected to, right now, I've got the forecast down 4%. And again, we'll have to watch imports to see if we need to kind of bump that up or bump that down. But we are looking at fed cattle supplies, fed cattle numbers to drop pretty dramatically after, the peak in 2022. And just a reminder, it really took until clear through the first half of 22 to clean up the COVID carryover, if you will. And so we really bumped the 2020 supply back, and these things take a long time to clean up. And it was clear in the data series that it just took us a long time to get all those supplies cleaned up, but they're cleaned up now. And we certainly are on the backside of that supply issue. As far as Canadian cow kill, Canadian cow exports, we do need to look at both pieces. So the blue piece is slaughter and the red piece is exports. And I haven't got them separated here for 2023, but slaughter was up 7%. So we certainly saw Canadian packers killing more cows in Canada last year, but our exports of slaughter cows were down 16%. So I think a lot of people thought that this marketing number would be substantially larger, but it was really only up 1%. So extremely similar cow kill is what we saw in 2022. But nevertheless, so it's going to keep our beef cow culling rate about where it was last year. And just to kind of take it into the production piece instead of just talking about numbers of cattle, what does it look like when you add it all together and talk about pounds of beef? You can clearly see our peak for production in this last part of this cycle was in 2022. This past year, 4% less beef was produced, less fed cattle slaughter, but a few more cows in that mix. Still meant we were down 4% in tonnage, and the expectations are for that to be down at least another 4%, depending on carcass weights. And I'll talk about that more in a second, but looking at still nevertheless a decline in production here in Canada. Taking that same topic south of the border, we've got a pretty significant change in supplies. Again, going back to 2022, record beef production in 2022. So this past year, we saw a 5% reduction in tonnage, down 5% for US beef tonnage last year. This next year, USDA talking about a 4% reduction in 24, another 4% reduction in 25. And then kind of flattening out. So over these last year and these upcoming years, we'll be seeing beef production in the US drop by a total of 13% from that peak in 2022. The slide on the right hand, so again, hugely supportive to the market from a supply perspective. The slide on the right hand side, just showing you how much we're going to see US steer and heifer slaughter change. We've already seen pretty close to an 800,000 head drop this past year. We'll see that again, or even closer to 1 million head reduction. Some of the updated numbers are talking for 24. So some big significant drops in fed cattle slaughter as we kind of round out the bottom of this supply for this cattle cycle. So again, that's kind of leading the charge, if you will, to this smaller beef production. And kind of just to finish on the production side, in terms of cow slaughter, we had a cow slaughter was reduced in 23 in the US. They had a big slaughter in 2022. This is beef and dairy cow slaughter together. 6% reduction in US cow kill this past year. The forecast, assuming moisture conditions improve, is a 10% reduction in US cow slaughter in 24, followed by a 9% reduction in 25 before kind of flattening out in there. So we've got some big reductions after coming through some pretty big volumes in terms of cow slaughter. All this final kind of what does it mean for how much US beef is going to be out there in terms of available supplies for the population base or on a per capita basis. We again start to see supplies drop off this year, going on into next year. And certainly by the time we go through this, we're looking at basically a 6-pound decline per person as we go through this phase of the cattle cycle, or a 10% reduction from the peak. So pretty significant when you start talking about pounds of beef available to the consumer going forward in this cattle cycle. Okay, I said I would talk a little bit about demand and trade, and I just want to be cognizant of my clock, so I'm keeping an eye on it. I definitely want to have some questions. We know, we've come through a very solid demand phase, especially through COVID. The chart on the left is their Canadian Retail Beef Demand Index that Canfax helps put together, and then the slide on the right-hand side, USDA and Kansas State put out this index, Retail Beef Demand Index. But you can see even the forecast coming out of Kansas State through to that bottom of this cattle cycle are showing, expected reductions in demand on a beef perspective at retail, and same within Canada, 3% reduction this past year compared to the peak in 22. But again, even with these reductions, looking at this data historically, these are still good demand indexes. So it's yes, retail prices are higher. It's going to weigh on demand to some extent, but at the same time, that would be expected, especially going forward with these smaller supplies and higher retail prices. And here's what retail prices look like right now. We did see 2023. We're still waiting on December data, but so far we're up 7% compared to 2022. We've got some kind of bumps around a little bit more than you'd think, but October prices were down right back up again, but in November, and I would expect that number to stay pretty strong through December. So that's, I think the other piece that we're going to be watching closely, we did see chicken prices at retail record high last year as well. They were 4% higher than 2022, but on the other side, pork prices were 5% lower in 2023 compared to 2022. And that competing meat factor, I think, will be, a limiting factor potentially for beef prices going forward, and something that we'll have to keep an eye on for sure. And wholesale prices, this is a US weekly choice cutout price that I've got on this chart in front of you. Last year, for the entire year, wholesale prices in the US were up 14%. And the projection for this next year is up 3%. And you're going to see, as I talk about prices going forward, that the big jump in prices that we saw in 23 are going to be a little bit more moderate in 24. Higher prices still expected ahead, pretty much on everything, but certainly more moderate increases coming off of the 2023 record prices we've seen. Now, the chart below here is our weekly price. I've got the start of 24 in the black bar there. You can see we've seen, certainly the impacts of this winter weather that's been hitting basically most of North America has really impacted production, especially at US packing plants. And we've seen that smaller supply, smaller kill equate back into some higher beef prices. So we'll see what kind of staying power that has. But what we'll be looking for is, kind of what we saw last year, some strength as we go into the spring, into grilling season. What was disappointing at the end of 23 was the fact that we didn't get that fourth quarter rally in wholesale prices for Thanksgiving and Christmas that we typically enjoy, especially like what we saw in 2022. So we'll be watching the seasonality of wholesale prices pretty closely to give us an idea about what might consumers be telling retailers in terms of these wholesale prices. Exports are a key piece of our demand, especially for us as Canadian beef producers. Pretty close to half of our beef production is exported, whereas the American number is closer to 12 to 13%. So certainly it's a very important part of our demand equation. The blue bar here is the volume of beef that we export. So in 2023, we saw it down 3%. The value is in this red line, and we can continue to see the higher value of beef show up in exports as well. Our value was up 6% in 23 at $4.8 billion worth of beef. If you put cattle in with this chart that you see in front of you is just beef, but we also export cattle to the US. And if you add cattle in with this, we're going to be in 2023 over $6 billion worth of exports, a new record in terms of value, dollar value for beef and cattle exports. So pretty exciting from a value perspective in terms of putting dollars in the pockets. On the flip side, though, imports are going to be up. They were up in 2023. I suspect they'll be up some more especially as we continue to see a smaller cow kill in North America. We're going to attract more offshore beef to help fill in that void. So this past year, we did see imports up 6%. I expect to see that again in 24. And I also expect exports to continue to be lower again, simply from a supply piece. So we're going to produce less. My forecast is that we're going to export less. But the chart on the right-hand side shows you clearly our exports in a volume perspective versus our imports. You can clearly see how much we're certainly still a net exporter to a large degree, but this gap will narrow a little bit as we go forward in the rest of this cattle cycle. Okay, let's kind of try to finish up on some prices here. I did want to just talk a little bit about feed prices for a minute. We did just, of course, finish USDA just kind of finishing with some recent numbers on their latest crop report. And the 2023 US corn crop was the biggest ever, 15.34 billion bushels. The yield was a little bit higher than expected, 174.3. So we've got a stocks to use ratio at 14.9%. That's a comfortable supply. You can see the impact that's had on price on the chart to the right-hand side. And we've got spot corn prices now getting down in that 450 an area. And if you look at this time last year, this green line, we're talking about a 35% reduction in the price of spot corn to start off 2024. So this had a significant benefit to a lower cost of gain, and this will be hugely supportive as well going forward to the price of feeder cattle and calves. US fat cattle market last year was 23% higher. It averaged 177 US. Forecasting for this year to be about another 5 to 6% higher, kind of calling an average for the year around 185. You can see kind of the range I've got established there. So here's where we've started. Now the market today traded a couple bucks higher, so that'll be reflected, a little bit of that weather market taking effect, but we'll watch this market and look for a more seasonal pattern, I think, as we go through 2024, i.e. spring high, kind of a summer low, and then back into a fourth quarter high. We did not see a seasonal market last year, but I do think we returned to that in 24. In Ontario, I think, our prices in Canada, whether you're talking Ontario, Saskatchewan, Alberta, we're going to follow suit with that. Last year, of course, you saw your Fed market up 27%, the average for the year at 228. And again, I would expect more of a seasonal trend to the market and that same 5 to 6% increase from 2023's prices. One of the things I've got that's kind of got me concerned for now is carcass weights. We've gotten some really big cattle on the market as we speak, and we do need, and this is, I'm talking about in Canada right now, we do need to see these weights come off a bit. We've kind of gotten behind in our marketings. We'll see. I haven't had any data since the cold weather happened to see how much the weights are going to come off. They will come off some, I'm quite certain. But again, just how much. We're already starting the slide on the right-hand slide, that top that black line in that top left-hand corner of that chart shows you where we're starting weights at for 2024. We're talking 55 pounds heavier than last year, 60 pounds heavier than the 5-year average. So this is pretty extreme. We've gotten behind. Kills were small in that fourth quarter for fed cattle kills in Canada, and this has caught us off guard considerably. So we need to see packers killing cattle and get through these big cattle. The longer it takes, the longer this fed cattle market in Canada could be at a pretty significant discount to the US. In terms of feeder cattle prices, of course, last year, great year for feeder cattle prices across the board in Ontario, a 35% increase in 23 versus 22. Your average for the year on 850 weights was 285. Again, that's Canfax data. I think as we go into 24, the seasonal chart I've got on the right-hand side, really still should hold suit. You did see feeder cattle prices peak as they should, and that late summer, early fall, and I would expect that trend to be the same again for 24 at again at slightly higher values than we saw last year. In terms of the calf market, same thing, a 35% increase in calf prices last year versus 22. The average was 328 for the year, but again, kind of a contra-seasonal market with that market strengthening into the second half of the year. Typically, you can see the chart on the right-hand side. You see your light cattle trade at their highs, their annual highs in the first half of the year, and their lows to finish off the fourth quarter. So, well, I think we need to be a little more cognizant that this could be more of a seasonal year as we go forward, but again, at higher averages than what we would have seen last year. And on the cow market, again, solid market last year, 25% higher than 22. The average for the entire year was 126.5. And if we do get some moisture conditions and we do see the cow kill slow up compared to what we saw in 23 and 22, I do think we've got a pretty good run into a May, June high. Typically would be your seasonal high for cull cow prices. So I think that's certainly going to be in the cards. The limiting factor would be how much beef is being imported to compete with our domestic cow volumes. And again, I think as we look at the cycle going forward, right now, the projections for US fed cattle would suggest that until we start to see heifers held back and really see the true cycle low in terms of supply, that the cycle high for price is probably out in 25 or 26. So it's, again, we've got lots of variables on the platter, but at this point in time, this would be based on the cattle cycle and cattle supplies. This would be what's in the cards, if you will. And again, if you translate that back to Canadian cattle prices, I don't think there's any kind of difference in terms of the trend. And we'll be seeing cattle prices, whether we're talking about fat cattle, feeder cattle, or calves, continue to trend higher until we make those cycle peak, whether it's in 25 or potentially in 26, depending just how long it's going to take for some moisture conditions to give producers enough confidence to really hold back some heifers, which then is what shortens up the supply even more so. And I did want to finish up at about Q2, so I think I'm going to be pretty close to that. I did want to just throw this one chart on. I know it's an Alberta, Saskatchewan chart, but I just wanted to go through it in terms of the kind of feedlot pen capacity that's being built in Western Canada that continues to mean even more pen space for potentially fewer cattle, depending on how many cattle come in from the US. So if you look at my projection for 2024, and Canfax will release this number in the first quarter of this year, but I've got anywhere from 80 to 100,000 head added capacity here in this past year. And if that were to materialize, if that's what the data comes out at, we'll be looking at a 23% increase in one-time feeding capacity here in Western Canada compared to 2018. So pretty significant. The number of yards is about the same, 172 yards is in this data series that they collect from. But again, it goes to show you that we've got a lot of bunk space chasing potentially fewer cattle. It might not augment well for profitability in the cattle feeding sector. But again, we'll wait and see how that all plays out. But again, more pen space chasing fewer cattle historically is pretty good for cow-calf and grasser or stalker operators. And I guess, if I was to put some things out that, things I want, I would be watching. I talked a lot about beef demand. Is that competing meat piece going to be something that limits where beef prices can go to? I don't think we're going to be looking at a big jump in prices at retail or food service again in 24. We've come through a big adjustment in 23, and now I think it's basically playing at those levels for the most part. The input cost still, I think, is a headwind. I talked about it a lot last year in my presentations. Interest rates as we go forward, labor, the sticky inflation, and all. Although the data might be showing us that it's stopped going up, I think it's. I heard one economist refer to it as sticky inflation in terms of being able to turn it and get it back down to the levels that the Bank of Canada or the US want to see it at. So these are still challenges. I think the other piece I would still mention, lots of volatility and uncertainty. I talked about averages in my presentation today. I think price ranges around those averages could be pretty wide. And so if you see opportunities, you may want to act on them. Nothing's ever a given. We've seen too many black swan events happen in the last few years to get complacent. And so I think you always have to have that piece in the back of your mind, whether it's an outside factor, whether it's war, whether it's, pandemics, whatever the case might be. We've seen lots of those, or even just challenges from within our own beef sector. We'll be watching our consumers closely. How do they react? Our export consumers have bought less. Certainly our Asian consumers have bought less beef. And if you're an American cattle producer, they're certainly looking at the smaller buying that China's been doing of US beef. And even though that doesn't directly impact us here in Canada, it does in terms of moving beef outside of North America. So there's lots of things to watch about not just our domestic consumers, but our export customers as well. And again, I hate to put it on here, but it's still a huge factor in so many parts of North America where beef cows reside. And that's the fact that we need significant moisture to get us out of this long-term drought we've been in. Many of us have been in. So with that, I want to give a little plug for Real Agriculture. They do a market update with me every couple of weeks. So whether you listen on Real Ag Radio on Sirius, or whether you do the podcast through realagriculture.com, certainly come check me out every couple of weeks on there, and I'll try to keep you up to date on some markets. But